Happy Friday, Brian Manning here with your update. Let's get right to it. Monday was a quiet news day. Not much really happening, not really much to report as a Monday, and then things started to get heated up. Tuesday, stocks started pointing out lower, and also for the first time in history, the German Bund broke negative this week. So very similar to our 10-year Treasury, which is a bond. And the difference though is and with the German Bund, it's like right now you give them money and you're paying them to hold it. It's kind of like paying rent for someone to hold your money in a bond. So not good, first time in history, and certainly rocked the financial markets. Tuesday this week we also got retail sales here in the US, which were okay. And we also got some good housing data. CoreLogic reports that foreclosures on a national level were down 23% year over year, and also serious delinquencies, so these are people that have mortgages that are more than 60 days late, are down from 3.1% to 3%. So really good to see continual strong housing data. Wednesday this week, Fed Day, had our Fed press conference, and of course we were not shocked to see that interest rates were not raised. Everything was left unchanged, but a couple of interesting things. One really primarily was very interesting to see that Esther George, who was the most vocal and hawkish Fed member of wanting to raise rates, now moved to a position of not wanting to raise rates. So interesting to see kind of the shift there. Also got the dot report. Dot report shows what the Fed members think rate hikes should be. And we went from anything of seeing no rate hikes for a couple of years to 5 rate hikes this year. So really unique to see how many Fed members are just not on the same board and just kind of all over the place with their thoughts of what they should do. Thursday this week, Central Bank of Japan, afraid not to play with fire, didn't want to raise rates, and that certainly moved the markets as well, caused a ruckus in the global stock markets. And then we also got some inflationary data. So CPI, Consumer Price Index here in the US, showed that inflation core rate went from 2.1% to 2.2%. So here we are looking at this again. Core rate of inflation is already over 2%, which was the Federal Reserve's target a long time ago for wanting to raise rates. Even though they look at a different gauge of inflation, we're still seeing this month over month increasing CPI, now above 2% for a little while now. So, now it's tough because they're in a position to where inflation's going up, job market's kind of dismal, and not really sure if they should raise rates or not. Today's a quiet news day, really not much to report for today, but really interesting to see right now mortgage rates are at an absolute 2-year low. Unbelievable, fueling the housing market, fueling a lot of refinances. So I will be around all weekend. I'd love to be part of your business. If you have any clients you need pre-approved, any questions in regards to mortgage lending, give me a call. I'd love to help you at any time. Have a wonderful day. Happy Friday.